Hi everyone. Today is Wednesday, September the 20th. My name is Anne-Marie Band and this is the Moneyball Morning Report for the Benzinga Pro platform. We've got the Fed ahead, and so here's what normally happens in an FOMC meeting event. I think they release at 2 o'clock or 2:15, something like that. There's an initial spike of motion, and then the Fed presser begins where there's another level of volatility, and then the day after there's also a likelihood of motion. So we are looking at potential expanding volatility in terms of price action and motion. A lot of things to think about. That being said, when we take a look at the prices, we are still in a space where we go, you know what, as long as I stay above this 442.90, 44300, I can go long. And if I lose it, I need to step out of the way, watch it fail the retest, and then go short. So let me show you what that looks like on a 15-minute chart. Okay, so here's what we've got. Let's take a look at yesterday. That's today, of course. Yesterday, take a look at what happened. We broke down right away in the early part of the morning, right? When the market opens up and we break down in the first 15 minutes, we know we're going to fade into a key level zone. So you can also take a short here as long as your trend is down, right? You want to follow trend because it's going to be the wind at your back, all right? Once it stops heading lower, right, fails to close lower, breaches resistance, and pulls back to a higher low. Now notice what happens here. Here it breaks down, it breaches resistance, and then it never comes back. So the question is, well, what do I do there, Anne-Marie? Here's the thing. If you breach a resistance zone and you expect a pullback, you can let that first candle go, and the very next candle you buy the open and use the breakaway area as your stop. Is it a complete pattern? No, but it's a pattern that works very well when there are a lot of buyers waiting. So the question might be, well, why were the buyers waiting there? And it's because of, in the futures market, we had 44.65 that was a gap fill between the roll of September to December contracts. And that made everybody just rush on in and start buying. Okay? I like the 15-minute candlestick. You could do it with a 5. It gets kind of messy. You could do it with a 30. You might get in just a little bit later, but I think the 30-minute works fairly well. Now notice this. Look where it comes back to at the close of the day, right into the breakout level, and then moves forward. Now notice, what's the goal? Hey, I got to get up over 443 because that's the line for the breakdown, right? We know that if they went long at 443 and the market fell down on them, as soon as it gets to 443, they're going to go, I'm out of here. And that's exactly what happened. Exactly. We actually traded this during our call, our Zoom call, which was fantastic. All right. Now, what to look for today? Same sort of motion. It's going to be very messy, folks. I want you to concentrate on your risk. Concentrating on risk is not sexy, but it will keep you safe. Okay, so you can make all kinds of analogies right there, but we won't because this is a G-rated audience. But you get my drift. Safe is better when you're in a landscape where you can have things bite your legs off. Okay, now, so 443, we wanted to get up and over there. We can see in the pre-market, we're up above that area. We gapped. We had a flash down here, the 442.20, but it's going to be the same thing. Listen, if it loses 443, let's say it breaks down, it loses 443, you're going to have to step out of the way. As soon as it recovers, you're off to the races. If you look at it and loses 443, it could very well be a short. You want to make sure for a failed retest and then fade. Why, Emery? Because the slope is upward. When the slope is upward, people are going to buy the dip. The dip might be deep, but they're going to buy it. And so you have to prepare for that if you're thinking about going short. Let's take the levels. Where could we go to the north today? 445. It could. If we've got short sellers in there, 445.40 is the weekly high, right? And then, of course, if we lose 440, we could easily get to 438. All right. Now we're going to take a look at the cues. What levels are we watching? Really, the chart's trying to recover. Tech has been just beaten with a stick, but really trying to recover. It gapped down into the week and trying to hold on. Let's go to the daily chart here first, and we can see that we're trying to hang on. Let's look at the 2 candles to the left. 3 candles, high, low, lower, high, lower, low, lower, high, lower, low. We're holding this edge. So here's my thought. 369.70 to 369, that's your floor. Traders, if you lose that level at that 369.20, you know that you need to step out of the way. Why? Because you could easily test these lower levels. We know that everyone's buying the dip. The question is, how deep is that dip? And where might I be able to look for it? And so this purple line, which is the volume point of control, is really telling us where price action can dip before we go long. And that's down at 365. So if you say to yourself, well, why can't I short? You absolutely can, right? The daily chart says you're sideways, that you're landlocked from about 372.50 and anything below, right? This ledge right here that we've broken down through, it could bounce all the way up there and turn around. We've got lower highs on each edge. So my thought is, if it gets above 370, it's long action into resistance. But once it gets up here, we're going to see some sellers. Now, if we go to our 30-minute chart and we say, well, what's my range? Look at what it's doing in the pre-market. Am I holding higher lows? Yes. Am I making higher highs relative to the formation? Yes, but what are we doing? We are simply trying to recapture old areas, but indeed, these are still lower highs and lower lows. So the chart needs to break through resistance, and pull back and make higher low. Could it be like yesterday's make a higher low where it absolutely doesn't? It just continues higher. You can look for that, make the long, and this breakaway area above 370 going to be the region where your risk is going to be managed. What do you want the short to look like? Listen, you want to get aggressive. You see that every wick here at 369.70 has been bought. So it's got to lose that level under this upward progression and then bounce and fail. This is a very tricky pattern to trade. I would definitely be very careful taking a look at it. Let's take a look at the ES quickly. Still up above 4,500, trying to hold on to the area. Also at the VPOC, the volume point of control. Let's take a look at the daily here. Look at this mess, right? Sometimes up, sometimes down, but low, high, higher low, higher high, higher low, higher high, higher low. What are the traders trying to do? They're trying to get back up here, 45.22. So I still believe we are under a buy the dip regime. The question is, where can I take it short if it's got a dip that's pretty sizable? And my thought is the following: 44.89 to 44.92 is a critical zone. If it loses that edge every time it's done that to about 44.82, it's bounced. And if it's bounced and it moves to the north, we've got ourselves long formations trying to recover 45.15 to 45.22. And, maybe even potentially 45.60. But it is going to slosh around. And here's what I want to suggest. I want you to sit on your hands during this business with the Fed, unless you are dialed in and completely focused, right? Absolutely focused, following your price patterns. Notice, what do you want to see? Failure to hold lower. Breach of resistance. Doesn't happen until this day. It's the third day. Then the pullback into support. That takes another 3 days, right? Same formation though. Breaks resistance, pulls back, and makes a higher low. Every single time. That gives us the long here into this zone at 4.557, and now we've got the charts just absolutely landlocked in this region. Pure scalping, and you want to watch for these areas. If you're long on the dip, take some profit when it comes up into that 45.03. We have no idea how long it'll hold. And my new favorite, the NQ. My goodness, I am really enjoying trading this lately, simply because its range has been fantastic. Very sideways though, right? Look at the last 4 candlesticks, and where we are in relation to that, we are going to try to get up here, because the buyers have literally come in and said, you might dip down there, but I don't care how far you dip. I'm buying whatever I perceive that low to be. And so we've got these higher lows, but a big messy patch in here. This is the please don't trade unless you're hawking patch. And then we have a potential bounce into 15,521 or a potential fade into 15,161. All right. I still believe we are under the buy the dip event, but as you can see from yesterday, these dips can get very savage before they start to bounce. All right. Take care, everyone. Good luck, and I'll see you on the platforms.